Following an executive order by Donald Trump, apparently mortgage applications have dipped 3.2%. Now, Trump has already had an impact on the housing market. And what exactly did he do? What action did he take that had this impact? Well, apparently, days before Obama's administration came to an end, he had signed an order involving FHA loans and the insurance that home purchasers would have to pay for if they have those types of loans. So FHA mortgages are for individuals who have low income, who might not have 20% to put as a down payment for a new home. And so you have to make sure that these people are insured in case they default, and then the insurance would help cover the costs to the people, to the organizations that made the loans, right? That's the whole point of FHA insurance. Now, Obama had cut a little bit of the premiums so people who take out these loans and buy these homes would be able to pay for it, right? They'd be less likely to default. Well, Trump comes into office and he's like, no, suspending this indefinitely. Okay, and so it was supposed to save people about $500 a year if their mortgage was about $200,000. And of course, it would save you more if your mortgage was worth more. But now, because of the fact that this fee decrease has been halted, taken away by the Trump administration, less people are able to buy homes. So let me give you more details in that. So total mortgage applications fell 3.2% on a seasonally adjusted basis from the previous week, according to Mortgage Bankers Association. Volume was 18% lower than the same week 1 year ago. Most notable was a 13% drop in FHA applications, a direct result of the Trump administration reversing a cut in the FHA's annual mortgage insurance premium just hours after the inauguration. Now, to be clear, that fee cut wasn't going to come into effect until January 27th. So people didn't even feel the benefit of this new policy because it never took effect. But it's also important to keep in mind that people thought, okay, well, maybe now I can afford a home, so let me apply for a mortgage and see if I qualify. And now it seems like people have backed out of it, or the number of people who would apply aren't doing so.
It's actually a really large effect, larger than I would have expected.
Yeah.
So I don't know if it took the Trump administration by surprise too, because they act so quick without really investigating things that that it's possible they're like, ooh, didn't see that coming. But you know, the first thing I thought when I saw the story was, I wonder which administration official is going to get rich off this. Right?
Well, okay, so again, you have to look at something like this in full context, right? Because what's the whole point of this insurance? It's meant to protect homeowners, or actually protect the lenders who gave out these loans to homeowners who defaulted, right? And so the argument that Trump's administration is making is, look, we need to make sure that the funds for this insurance are there. So in case of a number of people defaulting, we have the money necessary to pay these lenders back. But what's interesting is I don't see any data indicating that they're low on funds, right? And so they have to really make that case, and they haven't made that case. But here's the thing, I'm actually mixed on this. The more I read about it, I'm mixed on it. First of all, lenders have loosened their standards considerably. So there are more adjustable rate mortgages being given out to people who, quite honestly, have no business having mortgages, okay? And so I think that having this insurance in place is important, and I do want to make sure that it's properly funded. By the way, if $500 makes all the difference in the world for you in terms of whether or not you can afford a home, you shouldn't have a home. Okay, or at least you shouldn't take out that loan. I'm keeping it real with you. It's
especially on a $200,000 loan, if that's the make or break for you. That's why I thought the effect was surprisingly large.
Right.
So I hear you on that, and it might turn out to be a good one. By the way, how dare you be mixed on a Trump story? We are always against Trump, no matter what he does. Okay? No, of course, it's an interesting proposal, and we take all of his proposals and judge them on the merits, but also the context is informed by experience. So I don't know who gets rich off this, and it appears right now nobody is, right? In fact, it's it's hurting the markets, and I wonder how they'll react to that. But usually it's because someone asked, especially because they've done no analysis. They've only been in office for a week and a half. It's not like he said, all right, guys, go crunch the numbers and let's see how much they actually need in this insurance, et cetera. No, somebody had a specific ask as soon as they were in office to do this. So you do that either for a political agenda, and that's a little unclear here, or you do it because, I was kidding about the administration officials partly, mainly because a donor asked you. And the donors, as soon as you get into office, have a long laundry list of requests. And so who knows? I don't know if somebody was betting against the markets, or maybe, like I said, it might have had a consequence they didn't intend.
Yeah.
But somebody asked for this,
Look,
and they got it, and then maybe they got a little bit more than they bargained for.
Look, again, this is based on my analysis and my speculation. I could be wrong about this, so I want you to take it with a grain of salt. But based on what I'm seeing in the housing market, you see the lenders giving out risky loans. And then how are these lenders going to be protected if these individuals default? Well, you have this insurance program that will cover their costs, right? So you give out the risky loans. Eventually, if they default, you don't have to worry about it because the federal government's going to come in and they're going to cover your costs. So that's the thing that I have in the back of my mind. Look, here's something that I think everyone needs to pay attention to when it comes to the housing market. First of all, home prices are insane right now. Okay, they're in some markets more expensive than they were in 2007. So what the hell happened? I mean, wages haven't improved that much, right? So how are they slanging houses left and right? Why are they so freaking expensive? Well, here's what's going on. Large U.S. banks raised their own risks by pushing down lending standards for a fourth consecutive year in 2016. Looking at 90% of the debt in the federal banking system, equal to $5.2 trillion, the OCC found that banks are easing standards because of competition from other banks and non-financial firms. Their appetite for risk is expanding, and they are seeking to make more loans. Now, while this movement is consistent with past credit cycles at a similar stage, credit risk is expected to increase if the trends we see today continue. So again, year after year, they loosen their standards. And that's what I've been trying to warn everyone about when it comes to subprime mortgages. They're still being given out to individuals who have no business having these loans.
I figured it out. Trump's listening, watching the Young Turks. You're right. You have been saying that for a long time.
Yeah.
And he's like, you know what? They have loosened their standards. I think Anna's right about this. So look, you're right. As I look at that, when bankers increase their appetite for risk, watch out. Okay, here comes the bubble over those 4 years. They're making it larger and larger. Now, conservatives and progressives should agree on this. I don't know why. I do know why the government backs up some of those loans, right? And you have to have stability in the financial markets.
Yes.
But when they go to an extreme, which happens far too often and might be happening again, where they're like, go ahead, loan things out, and if things go poorly, we'll pick up the tab. Why? Why should the government pick up the tab if you've miscalculated your risk? Why should the gains go to you, but all the costs go to us? If you're a conservative taxpayer or a progressive taxpayer, you should hate that, and we do. And nonetheless, both Republicans and Democrats did the bailout. So if Trump actually cares about principle and is going in the right direction now because of that, great. I have to be honest with you. I'm super skeptical because of the speed at which it came, the level of detail that Trump does not have on policy. There was somebody who asked for this, and we don't know why. Now, if at the end of the day it turns out it's the right policy, okay, great. Then who cares who asked for it, right? I'm just note of caution on where it came from and what they might be looking for. That's all.
Yeah. By the way, they want to repeal Dodd-Frank, so the market's going to crash.
Okay, so that's going to happen.
That's going to happen. I'm just giving you guys that warning, okay?
Now you've been warned. Now Trump watching this goes, oh no, tweets out, market's going to crash. Sad, baby. The corporate media has multi-million-dollar anchors. We have you guys. Go to tytnetwork.com/go, and you can help hire investigative reporters that'll do real journalism.